Hey, I'm Zach, and welcome back to Zach Invest. When someone says stock market, what's the first thing that comes to your mind? Probably rich guys in suits, complicated numbers on screens, something that's just not for regular people like us. I used to think the exact same thing. But here's what changed everything for me. The stock market is the single greatest wealth-building tool ever created for everyday people. Right now, while you're watching this, millions of ordinary people are quietly growing their money inside it. No finance degree, no huge starting amount, no stress. And by the end of this video, you're going to know exactly how it works and exactly how to get in. Stay with me. Let's get into it. Pushpin Section 1. What is the stock market? All right, so let me break this down in the simplest way possible. Imagine your friend starts a pizza business. It's doing great, but to grow even faster, he needs more money. So he splits his business into 100 equal pieces and sells each piece for $10. You buy one piece. Now you own 1% of that pizza business. That piece you just bought, that's a stock. And the place where millions of these pieces of thousands of companies are bought and sold every single day. That's the stock market. Simple as that. When a company does well, your piece becomes more valuable. When a company struggles, your piece drops in value. No misteri, no magic, just ownership. The New York Stock Exchange, the NASDAQ, these are just giant marketplaces, like Amazon. But instead of buying products, you're buying tiny pieces of real companies. Apple, Google, Tesla, Microsoft, thousands of them. And here's the beautiful part. You don't need to be rich to get in. You can start with literally $1 today. Pushpin Section 2. Why you need to invest. Now, this is the part that completely changed how I think about money. And I need you to really hear this. If you keep your money sitting in a regular savings account, you're actually losing money every single year. I know that sounds crazy, but it's the truth. Inflation, the rising cost of literally everything around you, runs at about 3 to 4% every year. Your basic savings account pays you less than 1% interest. So every single year your money just sits there. It quietly buys less and less and less. But here's the flip side. The S&P 500, which tracks the 500 biggest companies in America, has returned an average of 10% every single year for the last 100 years. Let that sink in for a second. $1,000 invested today at 10% per year becomes over $17,000 in 30 years, without you lifting a finger after that initial investment. That's not luck. That's not some trick. That's just math working in your favor. And the stock market is the vehicle that lets you use that math. Pushpin Section 3. Key terms you must know. Before we get into how to actually start, let me quickly break down the words that confuse most beginners. Because once these click, everything else becomes easy. First, stock. A tiny piece of ownership in a company. When you buy one share of Apple, you literally own a small piece of Apple. You're a part owner of one of the biggest companies on the planet. Second, dividend. Some companies share their profits directly with you just for holding their stock. That money that lands in your account automatically, they're called a dividend. Passive income just for owning. Third, index fund. Instead of buying stock in just one company, you buy a tiny piece of hundreds of companies all at once. Much safer, much simpler. This is what I personally recommend for every single beginner on Zach Invest. Fourth, ETF, exchange traded fund. Very similar to an index fund, but it trades throughout the day just like a regular stock. VOO and SPY are the two most popular ones. Both track the S&P 500. Fifth, bull market. When stock prices are going up across the board, everyone feels good. Portfolios are growing. Good times. Sixth, bear market. When prices are falling, people start to panic. But here's what I've learned. Smart investors don't panic in a bear market. They buy more because everything is on sale. Pushpin Section 4. How to actually start. Okay, this is the part everyone actually wants. How do you get started? Step by step. Step 1. Open a brokerage account. Think of this like a bank account, but for investments. The best ones for beginners right now are Fidelity, Schwab, and Robinhood. All three are free to open. No minimum balance required. You can literally sign up in 10 minutes on your phone right now. Step 2. Fund your account. Transfer some money in. It doesn't have to be a lot. Even $50 is enough to start building the habit. The amount matters less than the consistency. Step 3. Buy your first index fund. I'm going to keep this simple. Go to your brokerage. Search VOO or SPY. Buy however many shares you can afford. That's it. You just bought a tiny piece of 500 of the biggest companies in America in one single click. Step 4. Set up automatic investing. This is the real secret. Set a fixed amount to invest every single month automatically. Could be $50. Could be $200. Whatever fits your budget. This strategy is called dollar cost averaging, and it means you buy more shares when prices are low and fewer when prices are high. Over time, this smooths out all the ups and downs and builds serious wealth. Step 5. Do not touch it. Seriously. Set it and forget it. The biggest mistake new investors make is checking their account every day and panicking when it drops. The market always goes up and down in short term, but zoom out, and it has always gone up over the long term. Always. Pushpin Section 5. Common mistakes beginners make. Now let me save you from the mistakes I see beginners make all the time on Zach Invest. Mistake number 1. Trying to pick winning stocks. Everyone thinks they can find the next Apple or Tesla before it blows up. Even professional fund managers with entire research teams fail to beat the market most of the time. Just buy the whole market through index funds. Stop guessing. Mistake number 2. Investing money you might need soon. The stock market is for long-term money. If you might need that cash in the next 1 to 2 years, keep it in a high-yield savings account instead. Never invest your emergency fund. Mistake number 3. Panic selling. The market drops 20%. You freak out. You sell everything. You lock in your losses. And then the market recovers and you missed it completely. I've seen this happen over and over. The people who stay calm and hold through the drops, those are the people who win. Mistake number 4. Waiting for the perfect time to invest. There is no perfect time. The best time to invest was 10 years ago. The second best time is today. Stop waiting. Start small. Start now. Pushpin Section 6. The power of compound interest. I want to leave you with one final concept that honestly blew my mind when I first understood it. And once you get this, you will never look at investing the same way again. It's called compound interest, and Einstein allegedly called it the 8th wonder of the world. Here's how it works. You invest $100. It earns 10%. Now you have $110. Next year, that 110 earns 10%. Now you have $121. The year after, 133. You're not just earning interest on your original money. You're earning interest on your interest. And over decades, this snowballs into something absolutely massive. $200 a month starting at 25 years old, at 10% average returns, becomes over $600,000 by retirement. The same $200 a month starting at 35 becomes only $220,000. That 10-year difference costs you nearly $400,000. Time is your most powerful asset, and the stock market is how you turn time into wealth. All right, let's wrap it up. The stock market is not complicated. It's not just for rich people, and it's not as risky as you think if you do it right. Open a brokerage account. Start with an index fund like VOO or SPY. Invest consistently every single month. Don't panic. Don't stop. And let time do the heavy lifting for you. That's the Zach Invest way. If this video helped you, drop a comment below and tell me, are you investing yet? Or are you just getting started? I read every single comment. And if you haven't seen my last video on how to get rich in your 20s, go watch that next. It pairs perfectly with everything we talked about today. I'm Zach, and I'll see you in the next one.